You always look at something that's up 50,000% or whatever it is and say, oh yeah, it's huge now, I can't get in. But then you look at when it goes up another 20,000% and you say, oh, it was actually small back then, but now it's huge. And then it goes up again. So when you look at assets that are shielded against inflation and governments and centralization, Bitcoin's actually still pretty small, which is funny. And we've been calling for 100K Bitcoin. We'll probably see 1 million Bitcoin at some point in my life, especially with inflation. So I really do think both assets can rise simultaneously.
You mentioned that gold is the global safe haven trade. Explain kind of how you guys are thinking about gold right now.
So this is something else. So we got ahead of this gold rally and over the last few months, kind of just started saying, well, this is interesting. You have a market where gold doesn't necessarily perform that well as it's been, but it's been incredibly hot. And not only that, over the last 2 months or month and a half, bonds have crashed. The 10-year note yield is at 4.3%. And gold is still now at 2,800, pushing even higher. People are calling for 3,000. We could definitely see it. It's interesting. You have this massive divergence between gold and bonds. So if you ask any person that's been in the market for the last 20 years or 30 years, it was always, in times of uncertainty, people buy gold, they buy bonds. That's it. Simple. And maybe utilities. Now, no one wants to buy bonds because they don't know what the Fed's going to do. For all we know, we could have rate hikes coming back. I mean, we had 50 basis point rate cuts priced in a month ago, and now there's the odds of no cuts are being priced in. It's like no one wants exposure to that kind of volatility, so they're selling bonds, and then you have geopolitical tensions everywhere. You have inflation. You have a lot of uncertainty, and then you have central banks buying thousands of tons of physical gold while calling for a soft landing. So it's like this whole storm. It's like everybody is stocking up on gold, including the banks that themselves say we're not going into a recession. And it's rising with every reason to fall. Even the US dollar, by the way, the US dollar index, the DXY, is up like 5% over the last 2 months or so. And gold is still rising. It's insane. If you put a chart with gold, bonds, and the dollar, it's like gold just said, you know what, have a good day. I'm going my own path. Like it's crazy. So that it's clear that people are flowing into gold, and investment continues to flow into there regardless of what's happening. And it's really is the safe haven trade. And I think there's just so much demand for the shiny metal that at this point it's not. Do
you think it's a psychological change? Like people have psychologically said, hey, bonds are not safe anymore. I need gold.
It could be. And I also think with rates, now that they even did a 50 basis point rate cut, now you're getting 50 basis points less on treasury bonds and treasury bills, and even high yield savings accounts are paying less. So now that gap between gold, that's a zero yielding asset, and a bond that's obviously not zero yielding is narrowing. So that's even proliferating it a little bit more. And I do think it is, people are saying, you know what, let's stick to the basics right now. Let's get back into the things that have more certainty and are less correlated with government, less correlated with, one specific currency, more as a global currency. And gold is at the top of that list. What else is at the top of that list? Bitcoin. Gold and Bitcoin are not substitutes. They can both rise together, and we've seen that happen.
Do you look at it as they're going to directionally trade together, gold and Bitcoin?
I think so. I think they'll. I think Bitcoin differs from gold a little bit in that it is more correlated to risk appetite, whereas gold is a little bit more inversely correlated. And that we've seen Bitcoin actually perform well in a market where the S&P is rising, where risky assets are rising. A lot of it because Bitcoin is a risky asset. But I also think that you're compensated for that risk. I mean, look at the returns in Bitcoin compared to gold. It's not even, doesn't even make a dent in the chart if you put them together. But at the same time, they both have that aspect of being sheltered from government, sheltered from one specific currency. They're inflationary hedges. They're finite in a way, I guess. The interesting is gold has a market cap that's 20 times that of Bitcoin. Like Bitcoin is so big, but so small at the same exact time right now. And
do you think those converge, those two market caps?
I absolutely think that gap closes. And I think most people don't realize that. You always look at something that's up like 50,000% or whatever it is and say, oh yeah, it's huge now, I can't get in. But then you look at when it goes up another 20,000% and you say, oh, it was actually small back then, but now it's huge. And then it goes up again. So huge and small is relative. And I think gold on when you look at assets that are shielded against inflation and governments and centralization, Bitcoin's actually still pretty small, which is funny. And we've been calling for 100K Bitcoin. We'll probably see 1 million Bitcoin at some point in my life, especially with inflation. So I really do think both assets can rise simultaneously.
So when I first started looking at Bitcoin and gold, I think I had two different things, and one of them I changed my mind on. One was gold and Bitcoin would have this flippening. Gold's market cap would expand over, Bitcoin's market cap would expand over gold's. My thought process was gold would be demonetized. And so you'd see that market cap shrink, Bitcoins would continue to expand, and you would get some cross. I think at the time gold was like 10, 11 trillion dollars, and Bitcoin was like, I don't know, 600 billion, 700 billion. I've changed my mind now because the data basically says, no, hold on a second. Gold's going to keep going up. It's just Bitcoin's going to go up faster, right? And so they probably do cross at some point, but it may take longer. It's going to be at a much higher level. And so gold investors are going to do just as well as I think they've thought that they're going to do. But the second thing that I find very interesting is that there seems to be a demographic difference in terms of most young people I talk to, they don't own gold and they're buying Bitcoin. Most of the older guys that I talk to, they own a lot of gold and they're starting to kind of dip their toe with the Bitcoin. But the institutions are all run by older guys, right? It feels like that changes over the next 20, 30 years, obviously, right? And so how do you look at the relationship between these two assets, 10, 15, 20 years from now? Do you think people still try to hold both? Or is there capital that would go into gold historically, but will kind of get siphoned off into Bitcoin?
What's funny on a side note is every time I go on Charles Payne's show on Fox, I'm like the only person there that's young and bullish of gold, and he's always like, the youngest gold bull of all time. He's always making fun of me. I'm like, but I love Charles, he's great. But I think it's interesting. Definitely institutional investors are retail is a lot less likely to go buy gold. Like some guy buying Bitcoin in his Robinhood account or whatever is going to be more prone to buying a risky asset or something like crypto or Ethereum or you name it, than just going to buy a spot gold ETF. At the same time, I think that can change, like you said, especially as the young people start getting into the institutional side of things. And also, the other thing that's changing is regulation. I think 5 years ago, everything was pointing towards the government striking down Bitcoin. Now it's actually become a part of the campaign trail. Like, candidates are speaking at Bitcoin conferences and criticizing, people who are not accepting the technology and the change that it's bringing. So I think attitude, and generally speaking, is changing. And I even think the older investors are starting to view it. And what drives an institutional investor more than anything, it doesn't matter if it's purple, green, gold, you name it, it's returns. If something has good returns, as a money manager, you can't ignore it. That's the reality. And I think, like you said, gold itself is not going to be some crazy performing asset that makes thousands of percents every 5 years. In my view, it might not even outperform the S&P 500. I think it will keep rising, but I think Bitcoin is going to significantly outperform gold, and it has, and it will continue to do so, especially as we break out higher and more capital flows into it. And as we go into more economic uncertainty, times with maybe more global inflation, that's even better for Bitcoin.
And do you think that eventually central banks hold Bitcoin as well? You mentioned that they're really buying gold aggressively right now. Do you think that that's kind of the end game here?
Maybe eventually. I think that we're still far away from that, though. That would be like the ultimate. That's like the strategic Bitcoin reserve too. Like those kind of things are. They would be great to see, but I still think we have some time.
Is that how we get the $1 million Bitcoin price?
I think that would be a big factor. I think also, just generally speaking, $1 million Bitcoin, let's just say you're talking about USD too, right? Bitcoin to USD will naturally keep, even if Bitcoin never went up, it will naturally keep rising just because the USD is going to always keep falling. A dollar from 100 years ago is worth 5 cents or something. So just that alone will keep pushing things higher. But I think it's going to go from both ends of the spectrum. You're going to see higher demand, higher prices, not just because of inflation, but because more people want to own the asset.